All right, well, in case you haven't seen today, the market has been under pressure, and the big news happened right around 10:30, 10:45-ish Eastern Standard Time when the Fed came out and spoke about a couple things. One of the things was when they were going to begin their tapering cycle, and they also spoke about inflation. And I think for the first time, they acknowledged that this inflation thing might not be transitory after all. And in this article, it says the Fed's Jerome Powell says the risk of higher inflation has increased. And if you scroll down and take a look what he said today, he says the higher prices seen today are generally related to the pandemic, but some price increases are also being seen more broadly, and the risk of higher inflation has increased, said the Federal Reserve Chairman Jerome Powell. Generally, the higher prices we're seeing are related to supply and demand imbalances that can be traced directly back to the pandemic and the reopening of the economy, but it's also the case that price increases have spread much more broadly, and I think the risk of higher inflation has increased. So like I was saying, I think this is the first time I've heard them talk about how inflation might not be transitory after all. So that is a big piece of information that's come into the market today, and the market is reacting to it accordingly. But also in the news today, Ray Dalio took to CNBC, and he was talking about how cash is not a safe place to be right now, despite the heightened market volatility. I don't know about you guys, but it didn't seem like a bad place to be today. But, we'll have to see how the market shakes out. But scrolling down into some of his other comments, he says, during turbulent times, it's also important to be in a safe, well-balanced portfolio. And if you're not familiar with what his portfolio looks like, you can find that on a quick Google search. For me, it's a little bit too conservative, but he manages a heck of a lot more money than I do, so he needs to be more conservative when he's managing that amount of wealth. But I am still of the opinion that this market turbulence we're seeing right now is only going to last about a week or so, and I'm thinking we're probably going to get a Santa Claus rally after all. Now, that is just my opinion. The market is getting rather shaky, but that's how I am making my trades. I'm still thinking we're probably going to end the year, on a good note. That remains to be seen. But Ray Dalio was also in the news talking about how he says America's decline will upend lives, not just portfolios. So he has some, pretty grim expectations for what is going to happen in the near future. And he says, right now, money and credit and how it's behaving are affecting the financial markets, and it's affecting inflation. And he says, America's domestic issues and decline as the world's leading superpower are more than simply a matter of debate to Dalio. They underpin the core thesis of his latest book, Principles for Dealing with the Changing World Order, How and Why Nations Succeed and Fail. So maybe this is just a plug on his new book, but I do think he makes some very interesting points. He says right here that Dalio believes there's a 30% chance that the U.S. will enter into a major civil war type conflict within the next 5 years. While other countries face similar challenges, America looks especially vulnerable. It's very important that we deal with this now, he says. We can have a type of civil war or international war based on how we are behaving with each other and our financial conditions. What's more, the U.S. is not alone in facing this dire scenario. So, doesn't have a very good look of the future so far. I think this article makes it sound a lot worse than it actually is. But yeah, there's definitely some dire news going on in the market today. But let's actually get into the charts and see how they are looking. All right, after a day like today, it just seems appropriate to get into the market averages first before I get into some individual names. But before I get started, please remember, I am not a financial advisor. All of this is for entertainment purposes only. This is just my opinion. Please make all of your own trading decisions. Now, if you are new to the channel, I usually like to show trades that are setting up. I'm not going to probably have any in this video because there isn't a whole lot going on in the market. It's a little bit too choppy. But if you'd like to see the potential trades that I see setting up before they make their move, please make sure you subscribe so you don't miss any future trading ideas. Plus, I also have a Patreon group. It is only $10 a month. So if you want to join our small trading group and know what we are trading in real time, that link is down there in the description. But getting into the NASDAQ first, we're going to look at the QQQ. We can see the QQQ had a complete about face from yesterday's move above the 8-period exponential moving average, and that is not good at all. Unfortunately, it looks like it's being dragged lower again by the other indices. And if we go to that 15-minute chart, we can see that it's starting to make a little bit of a megaphone pattern, and usually these things result in another touch of this lower trend line, and if that happens, that's going to be a pretty decent size move down. The next area of support I have is actually, let me see if I can back it out a little bit here. Let me go to the hourly chart. Is actually right here, right around 382.75-ish, and that's a pretty steep move down from here. So that could get a little bit bumpy if we end up breaking through this support area. We got this lower trend line just below that support area, and then we got this last area of support before we take this plunge down to this area. And we also have that 200-period simple moving average on that hourly chart. But let's actually go back to the 15-minute chart for a second. And just the way this megaphone pattern is playing out, it's not looking so good. And the market looks like it's trying to carve out a bottom right now. Hopefully it can complete that and start to turn back up. But if you had to ask me, I think the path of least resistance is still lower, and if we get some lower prices in the next week or so, I'm probably going to be a heavy buyer. I did put in some orders to buy a couple of my long-term positions today if they fell a little further, and as of this recording, none of them have gotten hit yet. So even though the market has been weak after the Fed came out and spoke, it really hasn't gotten weak enough for me to add to any of my other positions. Hopefully the market heads a little bit lower into the rest of the week, and I can add to some of those long-term positions. All right, so let's go back to the daily chart, and then let's get into the S&P 500. We can see the S&P 500 looks much, much weaker, and the way the market is shaping out, really disappointed in myself that I don't have a hedge on. I usually have an inverted ETF when this type of market environment is happening. I was in the SQQQ, but the Qs have been the strongest out of all of these, and I actually closed that out for a small gain just a few days ago. And man, I kind of wish that I had traded that in for an inverted ETF on the S&P 500 or the Dow, but we can see the S&P 500, the SPY, is screaming towards that 50-period simple moving average and this support area right around 350, 350. So that's where I expect it to be here in the next day or so. And if it does get down to that level, I'll probably be nibbling a little bit. Let's go to the Dow Jones Industrial Average, which is the DIA. We can see this one is screaming towards that 200-period simple moving average. Like I said, I thought it probably would in my last video, so definitely a lot of weakness, but you can certainly see the trajectory on the Dow getting really steep. So I mean, this one is getting pretty stretched out. It's way away from that 8-period exponential moving average way up here. So I think a reactionary bounce is pretty close for the Dow, and if that happens, that should bounce the entire market up. So we might only be down for another day or two. That's why I think I'm going to be nibbling if we get some more downward price action in the next couple of days, because we are certainly overdue for a bounce. And looking at the IWM, see that IWM is almost all the way down towards the lower end of this consolidation. I certainly didn't think that was going to happen after this breakout, but you never know with the market. But if we do get a little bit of a bounce later in the week, I'm probably going to be looking to get a little bit of a hedge trade on. And the ones that I'm looking at are the SDS, which is the inverted S&P 500. Actually, let me go to the SQQQ because this is the one that I was in. But you can see it is, it's not rolling over nearly as much. Or I shouldn't say the Qs aren't rolling over nearly as much as the S&P 500 or the Dow, so this one is underperforming. But if we go to the inverted S&P 500, which is the SDS, you can definitely see this one is really starting to blast off. And if we go to the Dow, which is the DXD, that's the one that I usually like to play, we can see this one is just exploding higher. So it would have been a much better play for me to trade in that SQQQ for the DXD, but you know, hindsight is 2020. You never know which one is going to be the one that ends up falling further, but it certainly has been the Dow so far. But I did make a day trade today, and let's get into that. All right, well, once again, I am holding off on the swing trades for now until we get some, pretty decent market direction. Now, I did make one day trade, and it was rather disappointing. This one ended up in a loss, and it ended up in a loss in a very frustrating fashion, so please try not to laugh. I did lose real money on this one, but let's go to the 15-minute, or the 5-minute chart, and I will show you how this one played out. This thing, looking at this chart, you would say, how the heck did you lose money on this one? But I ended up doing it because, once it broke to this level right here, I was really liking this price action. I bought just a tad bit early, but as soon as I bought in, this thing reversed, and I actually put in my order to buy at I want to say 465 and executed it at 471. So I got a really bad fill and immediately started to trade lower. I put in my stop at $4.29. And for some reason, as it was starting to get close, I was like, you know what, this probably isn't going to work out. It's going to stop me out anyway. So I raised it to $4.32. And wouldn't you know, it came all the way down to 432 and stopped. It came down, stopped me out, took my shares, and then the thing took off. So if I'd have kept my stop at $4.29, probably would have got out, I'm guessing probably right around here, maybe a little over 5 or so, and it would have been a pretty decently profitable trade. But unfortunately, I ended up buying right here and getting out right at the bottom. That happens every once in a while. You got to have some line in the sand. I probably should have stuck to my instincts and stayed at 429. But, I thought I was going to get stopped out anyway, so I just raised it a little bit, trying to protect a little bit of capital. And since I didn't stick to my trading plan this time, it probably would have worked out if I would have just kept my stop there. But unfortunately, this was a very frustrating trade. Wow, we can see it's actually starting to make a decent looking setup again. I'm definitely not going to trade that because we're getting a little late in the trading day. But man, just an absolutely beautiful setup. Had that nice looking bullish pennant formation. I just happened to put my stop just a little bit too close and missed out on it, even though it was a very nice setup. But that's all I did today, guys. It was a rather disappointing day. I wasn't able to add to any of my long-term positions. I love it when the market is actually down big. I mean, a lot of people hate it. I don't mind it when my stocks are pulling back, especially when I can add cheaper to some of my longer-term positions. But I didn't even get to add any there either. So just a disappointing day all around. Okay, everyone, that is all I have for this video, so I'm going to end it right there. But if you have any questions or comments on any of these stocks, or if you have any other ones you want me to take a look at, please leave it down there in the comments section. I will get to them as soon as I can. If you enjoyed the video, please hit the like button and subscribe to the channel if you haven't already. Thank you so much for watching my video all the way to the end, and until next time, take care, everybody.